Has Bitcoin finally reached the bottom of its correction, or is there a little bit more still to come? Guys, in this video, we're going to jump down into the desktop to take a look at what has been going on most recently with Bitcoin, what I think is more than likely going to happen next, and what I think is actually going to happen slightly longer term as well. As we get into this video, if you do find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you are going to be kept up to date with everything that we do here at Cheeky Crypto. Right, with all of that said, done and out of the way, let's jump on down into the desktop and take a look at what is going on here with Bitcoin. Okay guys, we're going to start things off by really analyzing this hourly chart. So we actually had this overextension go on here with our fifth wave, okay? And so yesterday we were talking about, you know, how we're getting into this 618, this 1.618 area. We're looking at the support of the previous head and shoulders neckline, and obviously that's broken down. So let's actually jump into this and see what's going on here and what I think might actually happen next here, because there is some interesting stuff going on, right? So obviously inside here we have some interesting kind of wave counts going on right the way from up here at the top of our fourth wave. And we obviously have one ABC down, we had this ABC up, and an ABC. This actually is now effectively an impulsive move to the downside, right? And what I'll do is I'll show you this. So if I measure this wave count right here, transpose it over to this high, which would have been a B wave, we can see that this has come all the way down to below the 2.618. Okay, so that's an impulsive move. Now, why is this important? Well, this is important for a couple of reasons. One, as from here we can actually analyze a couple of different things that are really worth us understanding in a little bit more detail. So I'm going to quickly remove that fib, and then what I'm going to do is I'm going to remove this one. I'm going to remove this ABC here, and I'm going to just focus in on what I had marked up here as 1, 2, 3, 4, 5. This is now looking more likely to be a third wave finishing here and a fourth wave finishing just up here. And the reason for this is that then it means our fifth wave will make a little bit more sense, okay? So as we kind of look at this, we can see here that there's 1, 2, 3, 4, 5, right? So we have 5 waves inside of our third wave. So we come down for 1, 2, 3, and then 4, and then 5 coming into the bottom here. And if I just move that over, so you can see how that kind of marries up with the candles, right? Now, 5 waves inside the third wave is what you'd be looking for. Now, our first wave doesn't have this, at least not something you can really accurately count here. So there might have been something inside here on a smaller time frame that you could count it as 5, but actually it looks like an ABC. So it's actually a 3, 5, 3, potentially 5. So still quite a corrective one, not a 5, 3, 5, 3, 5 that I would have expected. But obviously, with 5 waves being here and an ABC to the upside here, or specifically, yeah, we would be the low point actually here, and this one over here, this ABC move, double top, and then this pull back down. Now, I'm going to just move that over here for a second. We can, of course, acknowledge that this would be an ABC impulsive, as I said, and therefore we measure this as a 1, 2, 3, this being 4, fifth wave still to come. Okay, so there's a little bit more downside here, potentially on the horizon for Bitcoin. So what I'm going to do is I'm going to grab hold of our Fibonacci retracement tool, and we're going to measure the distances, okay? So we're going to assume that this is our fourth wave high and our third wave low, and when we do this, this actually takes us down into this range of 37,625. Okay, and obviously there's a good support down here at 37,558. So there's a really good area of support to be found right here on top of this 1.618. So therefore that's the most probable area that we are looking to kind of come down to. So as I come into this, we can now draw that up as a 1, 2, 3, 4, and 5. So not only do we have 5 waves up here with 1, 2, 3, 4, 5, then 3 waves up, A, B, and C, and then 5 waves down. This is now looking very, very much like completion of the impulsive move down. Okay, and again, all of this is actually a part of an A, B, C move on a larger time frame. Okay, so if we come up into a 4-hourly one, you would see an ABC, and this C wave with this move down here has now gone impulsive. And what does that mean? Well, it would mean that this here becomes wave 1, this is wave 2, and this here it would be wave 3. We then look for a bounce for wave 4, and we come down lower for the 5th wave. Now, what does that mean? Well, that means we're coming down right into this low range down here. This is the most probable, I think, in our kind of scenario. And as you can see here, I put a bounce approximately right up here. Let me just actually move that back one sec. So if I pull that 4th wave up to as high as that, you can see the 1.618 comes down to $36,000. If I were to drop this down a little bit and we don't have a bounce as high, and we were to come up to, let's say, 40,500, again, this is an area of interesting level of resistance and support, then actually that 5th wave could take us down into those lower ranges of $36,000 right down here where we had previously found support. This is a pattern that I've been talking about pretty much since it started to form, when this FOMO phase kicked in, and that I was really worried about. It was this pattern of we pushed up, we went across, we pushed up, we went across, we fell down, we've gone across, and we're falling down, guys. So this is the most likelihood, and this pattern is something that you see market makers use a lot. So if you look back at the history, you'll find that market makers push the price up and then pull it back down again, taking out all those leverage positions and stop losses and all that kind of stuff. So there's a few people in the space talking about that really early on. So if you were aware of it, and hopefully you're able to kind of dollar cost average on that way down, whilst also wiping out some of those other key areas. Now, what does that actually mean for the kind of longer term plays, right? So all of this basically was artificial, okay? But it does actually invalidate some of the lower points that we were talking about previously, right? Now, obviously, this is all just technical, doesn't take into consideration anything that is going on in the real world. So, you have that whole Russia-Ukraine thing, and if Russia invades Ukraine, what kind of impact would that have? None of that kind of data is inside the charts here. That's kind of stuff that you can speculate on. Is it going to happen? Is it not going to happen? All that kind of stuff. The data doesn't really respect that. Some of it might be baked in. You might see a little bit of kind of fear around it, so people are kind of exiting out. But for the most part, what you're actually seeing here is this whole pattern playing out exactly as kind of articulated about a week or so ago. So obviously this means that we have this A wave up, we have a B wave down, and now we can actually adjust our Fibonacci target for our C wave, which was going to be going up towards 55,000, now is just $50,000. Okay, so the C wave target is still very valid. In order to invalidate that C wave target, we have to come down lower than that $32,900 range that we were obviously as low as before. So this is still very much valid, and we are of course coming to the very end of a correction, in my opinion. And again, this is based on a few different things. So if I come into our chart data here, we obviously have a really lowered stochastic RSI on our hourly, but I do expect that to push up and pull back down. Our 4 hourly is come down into the oversold area, but I expect that to go back up shortly. The 8 hourly is already oversold, the daily is oversold, the weekly is oversold, the monthly is oversold. We're basically now coming to the end of a correction for a big surge to the upside, and that target right now looks like it's going to be around that $50,000. Now, there's a couple of areas of resistance up here. It's actually quite a few, but to be fair, I just marked out these two here at $47,000 and $47,500. But there will be more, obviously, as we start to come right up into this range. If we actually focus in on where this one is, there's a possibility that we actually overwick it a little bit here. There's a strong resistance right up here at $51,000 to $52,000, right in their sweet spot right there. So for now, that's kind of what we're looking at on the slightly larger time frames. A pullback coming down on the kind of the hourly, and to get that 5th wave kind of bottomed out, and obviously then we look for this push to the upside. Now, the other thing that I was kind of concerned with, obviously, is that kind of the entire 5 waves down, as in the same way that we had 5 waves up, it being incredibly artificial in its nature. What does that mean afterwards? Well, hopefully this is actually going to now see some natural kind of growth that goes behind it. So we'll have to just see how things kind of look from a data perspective once we come down into this kind of the bottom of the range here. Now, what I'm going to do is I'm going to come over to Glassnode here, and what I'll do is I'll just quickly log in here. And all I do is I'll come on over into one of my favorite reports, which is under exchanges, and it's the net position change. And what I'm going to do is, obviously, you can see here, all the data from 2012 all the way through to where we are currently. We haven't seen this much red ever in the history of Bitcoin, really, ever since 2020. The level of adoption here on Bitcoin is vast. Now, I'm going to focus in specifically on the 2021-2022 data. And what we're going to do is we're going to review, what's going on, right? This price is pulling back quite significantly ever since September. And yet, we've actually seen, nothing but adoption, right? Coming in here, i.e., accumulation. This is basically all this red is Bitcoin leaving the exchanges, and the green is Bitcoin coming onto the exchanges in a net difference. And what we mean by this is you take all of your inflows and all of your outflows. What is the difference between the two? Is more Bitcoin coming on than is leaving, or is more Bitcoin leaving than is coming on? Right now, you're actually seeing since January here, we've seen nothing but Bitcoin leaving rather than coming, right? So really key data, right? Price pulls back, but normally when price pulls back, you actually see Bitcoin loaded onto exchanges where people are panic selling. They're trying to get out of the market. So you see the market, you see the exchanges get loaded up with Bitcoin, and we are not seeing this. This is actually a strong indication of accumulation. And the same thing that we saw with Binance, for example, when they bought up 43,000 Bitcoin, right, when the market was coming down. Obviously, there's lots of things I was talking about at that time around the very specific price targets that were being hit on Binance data. So, really what we're looking at is these institutions, these whales accumulating Bitcoin, taking it off of the exchanges and putting it into cold storage. The other kind of report that I do for the Patreon members, if I can find it in here, it might be under supply. I'll check that out in a second. It's all about those hodl waves. Actually, I will find it. Let me find the supply. And I know it's in here somewhere towards the bottom. Hodl waves, here we go. So the hodl waves basically are showing us as a percentage point, how long particular wallets have actually held Bitcoin and whether or not there's any percentage change in the time periods of holding. So long-term holders, 10 years or more, 7 years or more, 5 years or more, 3 years or more, and so forth, right? And when we actually hover above this and we actually check these percentages day on day, we notice that actually the only people who are actively moving Bitcoin around are the lower time frame holders, right? People who have been holding Bitcoin for less than 12 months. Anyone higher than 12 months have actually just been growing. That percentage has just been growing. It hasn't actually been dwindling down. So this is a really important report to also know. And again, I do this every day for Patreon members and in our Discord server. So if you're familiar with that kind of stuff, you'll know that obviously we keep an eye on whether or not any long-term holders are moving their Bitcoin or whether it's still in cold storage. And that's what this report is all about, which is really, really good stuff to kind of get your head around. In terms of the balance on the exchanges, this is actually fluctuating a little bit as Bitcoin's price pushed up. Obviously, Bitcoin was still leaving, but the actual balance, the value of it on exchanges was actually going up because the price of Bitcoin was coming up. Now, obviously, as the price comes back down, those balances on exchanges also comes down. So overall, what we're looking at here is a bit of a reversal and a bit of a turning point, but we do need to see this come down a little bit more. We need to see those wave counts get completed, and we need to be quite aware that this is fifth wave, and we are going to push up, then we're going to fall back down, and then we're going to be surging up here, right? So this is not a quick thing. We basically are looking to complete a micro movement on a fifth wave. Then we're going to be pushing up into, let's say, a 4-hourly move into around the $40,000 range. And then we come back down towards about that $36,000 range, complete out that fifth wave, which would take us right back down to where we were previously. And then from here, we look to get an impulsive break to the upside. That is kind of what I'm looking for here for Bitcoin. That is what the data is suggesting to me with the impulsive move. Of course, there are a couple of things that we want to be very aware of, and those are the invalidation points. In order to prevent ourselves from falling down into the $36,000 range, what would have to happen? Well, Bitcoin would have to come up higher than our one wave or our A wave, right? This would basically be if we cross 41,600, that's invalidated. We are not likely to come back down here, and we can just continue a good surge to the upside, heading up towards this kind of range. Now, again, this number will fluctuate depending on whether or not we come down to $36,000 or whether or not we are actually finding a nice low point right down here, in which case, that number will increase. So for now, I'm going to be pessimistic on it. I'm going to say it's highly probable that we are going to be coming down towards $36,000, and then from there we'll be looking to move up to $50,000. But obviously that requires us to first of all move up to 40 before we can come back down towards 36, right? This is not a straight down to 36 scenario. This is a bouncing scenario where we bounce up in a fourth wave, where I'd expect 3 waves up, an ABC, so a relatively sharpish one, and then 5 waves to the downside that could be taking quite some time, and again, volatility is expected during that time period. Again, something similar to what you saw over this side, but no overlapping. Okay, so that's kind of what I'm looking at here for Bitcoin. Overall, I think we're very close to getting towards the bottom, but timing is always the hardest thing to gauge. There's no guarantee that it's going to happen fast. There's no guarantee it's going to happen slow, but obviously, you know, one thing that I am pretty confident on at this point is that we are likely to see $36,000, unless of course we get a really big surge to the upside and take out that $41,600 range. Guys, I'm going to leave the video there. If you have found this particular video useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then go ahead and subscribe, tap the bell, select all notifications, and in doing so you are going to be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.